You're making $250,000 or more a year, your income went up last year, and somehow you still feel like you're not getting ahead. Not broke, not struggling, but not where you thought you'd be either. If that sounds familiar, stay with me because what I'm about to share isn't about making more money, it's about why the money you're already making isn't building the wealth you expected. Here's what nobody tells you when your income crosses a certain level. The game changes and most people keep playing by the old rules without realizing it. So in this video, I'm going to break down exactly what I call the 300K trap, what it is, why does it happen, and what the shift looks like when people start moving out of it. This is educational content only. It is not financial or tax advice, but if any of this connects with your situation, I'll share how you can take this further at the end. Let's paint the picture. Someone earning $250,000 a year. From the outside, everything looks great. The career is moving, income is strong, life has improved, but when they sit down and actually look at the numbers, something doesn't add up. Every raise improves their comfort, but it doesn't create real separation. The house gets better, the travel gets better, day-to-day life gets easier, but the distance between where they are and where they thought they would be barely moves. And here's the part most people miss. Nothing feels broken, there's no obvious mistake, and there's no bad decisions to point to. But underneath the surface, a very specific pattern is running quietly. As income goes up, everything attached to it expands at the same pace. Expenses rise naturally, taxes scale with income, and what's left gets split between investing and maintaining the lifestyle the income created. So the cycle looks like this: earn more, pay more, upgrade life, repeat. And when that cycle runs long enough, it stops feeling like progress because income is clearly moving up, but the financial position isn't improving in proportion to it. That quiet tension, that feeling of, for how much I earn, I thought I'd be further ahead. That's the trap. Now here's where most people misdiagnose it. The first assumption is always, it must be lifestyle inflation. And yes, that plays a role, but that's not the full picture. Because even disciplined high earners, the ones who save, invest, and stay intentional often feel the exact same pressure, which means something else is going on. Here's what it actually is. Most high earners were never shown how to position their income. They were taught how to grow it, and the system doesn't treat every dollar the same. Two people can earn the same amount, build a similar net worth on paper, and still end up in a completely different financial position over time. Not because one worked harder, not because one made better investments on paper, but because their income was flowing through a completely different structure. One was reactive, the other was designed. This is where the gap starts to widen. At lower income levels, the structure doesn't matter much, but past a certain income threshold, structure starts to matter more than effort. Think of it this way. Most high earners are operating on one or two paths. Path one looks like this: you earn, get taxed, spend, invest what's left. It's the default, and it feels productive, and for a while it works until it doesn't. Path two is different. Design the structure first, position the income first, then let it flow through the framework. Same effort, different setup, completely different outcome over time. And here's where it gets specific. At higher income levels, a different pattern tends to show up among people who are actually building momentum. Most of their meaningful wealth growth doesn't come from their income directly. It comes from assets, ownership, and positioning. Income is immediate, it's visible, and it's heavily exposed to taxes, to lifestyle, and to inflation. Assets move differently, they compound quietly, they follow a different timeline, and depending on their structure, they can interact with your tax situation in ways that most people at this income level have never explored. This is where conversations around things like oil and gas investments often come up, not because they're the only answer, but because certain investment structures carry tax treatment mechanics. Those high earners in the 200 to 500K range tend to find relevance when they start asking the right questions. It's not saying it's a fit for everyone, every situation is different, but the pattern of moving from income as the engine to structure as the engine, that part is consistent. So let's bring it back. The 300K trap isn't an income problem, it's a structural problem. And the reason it's hard to see is because nothing on the surface looks wrong. Income is healthy, lifestyle is good, investments are happening, but the system underneath was never designed for this level of income. So the returns feel slower than they should, not because something's broken, but because only one side of the equation is being optimized. When that shifts, the questions change. Instead of how do I save a little more this year, the question becomes, how is the entire system designed to perform over the next 5 to 10 years? And that one shift changes everything that follows. For those of you that don't know me, my name is Bennett Walsh. I work with high earners in the exact same range we've talked about. This is W-2 professionals, business owners, investors who all came to me feeling exactly what I've described. Strong income, smart decisions, but not gaining ground the way that they expected. And in most cases, the issue wasn't effort, it wasn't discipline, it was that they were operating inside a default structure that was never built for efficiency at their level. So once that becomes visible, the path forward gets a lot clearer. Not dramatic, not overnight, but intentional and compounding. If what I shared today connected with you, comment the word trap below. I'll share the framework that many high earners look at when they start approaching this more intentionally. And if you want to go a step deeper, there's a link in the description where you can book a call directly with me one-on-one. We'll look at how your income is currently structured, how it's set up, and whether there's room to improve how things are actually flowing.